Hey, what's going on YouTube? In this video, we're going to go through Uber Technologies, ticker symbol UBER. What we're going to do is we're going to run through the financials and go through a quick financial analysis on the company. And after that, we're going to go through the valuation calculator, which we have over here. And there's a link down below in the description if you're interested in wanting to have access to this calculator to figure out what a fair market value is on some of the companies that you are interested in. And then after we do run through the financial calculator, we'll take a look at the stock chart and see how this thing is technically trading. Year to date, Uber has up 103%. And of course, the 1 year is up 78.8%. They do have about 2.2% short interest on the company currently. Uber did report earnings November 7th and missed on top and bottom lines. However, they gave pretty decent Q4 guidance, and with that guidance, analysts have since then revised their expectations higher, and 9 of them had revised their expectations lower. So overall market sentiment on their earnings is positive, as we can see over here on the stock chart. Company rallied into earnings, and even after earnings, company still has made another push higher, and we'll come over to the stock chart and see what technicals are saying on Uber. So over to the financials, we got revenue, gross profit, net income, all are ticking higher, which is fantastic. We got revenue doing a very good job of growing. We have a gross profit, which is following. We have net income, which is struggling to find a direction right now. Obviously looking like it should be going higher, since we have it's very volatile net income on Uber currently. So maybe now that we've peaked back into the positive territory, maybe it will maintain there and we'll start seeing some good net income, and maybe they can increase their net margins as well going forward, since we can come down to gross margins and see gross margins have been significantly better, up to about 10% better before, even slightly more than that. And if they were even to grow half that, get this back up to 5%, you could potentially see maybe half of 5% carry over to net margins, and potentially see 5% net margins on the company, which would be a pretty big game changer for the valuation on the company, because net margins then carries down to earnings per share, assuming we don't get tremendously more dilution on the share count. Revenue and gross profit, we've got growth on revenue and gross profit still sitting at 13% revenue growth and 16% gross profit growth. Return on invested capital currently sitting at negative 2.5%. Earnings yield basically sitting at zero, negative 0.42%. Cash to short-term debt and cash to total debt. Company's got a lot of liabilities. They got $25 billion in liabilities and $5 billion in cash. And come up to short-term debt, they've got $9.4 billion in total short-term liabilities. Net income to free cash flow. A company does produce $1 billion of positive net income recent in the trailing 12 months, and also $2.3 billion in free cash flow. We come over here to free cash flow, we can see $2.3 billion in free cash flow. But a lot of that free cash flow is attributed to stock-based compensation. As we can see here, they paid out $1.95 billion in stock-based compensation and are not buying back any shares, very nominal amount of shares buyback right now. So as shareholders, we will continue to see dilution in our ownership of the company. Capital expenditures, though, on the company has done, they've done a good job maintaining and slightly reducing their capex, and they've done a fantastic job of contracting that to negative $227 million in cost on capital expenditures. So nicely done there. Onto the comps. When I think Uber, I think Lyft. So I compared Uber to Lyft on this analysis only. You could potentially throw in a couple freight companies as well, since Uber is dabbling into the freight business as well. So come down here to comparison charts. We got market cap, revenue against both companies, and we can just kind of really quickly assume and see that Lyft has no chance, no market share against Uber right now, and has a lot of work to do. We can just see that just plainly on the revenue. They're only doing $4.5 billion in revenue, whereas Uber is doing $36 billion in revenue. So I mean, Lyft has got a lot of work to do to come up and actually be somewhat competitive to Uber right now. And we can come and see these margins are tremendously different. We can got gross margins, which are the same. We got operating margins and profit margins on two different sides of the spectrum. We got operating margin on Uber of 1.2%, Lyft negative 23%, and profit margin 2.8 to negative 21% basically on Lyft. Free cash flow, same thing. We got negative free cash flow on Lyft. Return on invested capital, tremendous, just terrible on Lyft. And we got earnings yield, also very bad. So Lyft is not much of a competitor. Probably nothing to worry about taking market share from Uber. P&H valuation on Uber gives them a fair value of $71.49. We do have multiple comparisons, but Lyft is a negative company, so we will not have any comparables. Manual PE, we got market cap minus cash, add in debt, divided by cash from operations. It'll take about 50 years for this company to earn its current market cap. We can see down here on our key that is doubled overvalued. Price to book, 5-year average 6.9, currently today 9.71, overvalued based on price to book as well. PEG ratio, we got today 5.7, forward looking 2.6. Also both overvalued, as we can come down to the key and understand that. Graham's valuation gives them intrinsic value of $115.54 per share. Onto our discounted cash flow. Analysts did not have a percentage expectation of growth rate of free cash flow. History of free cash flow growth rate is 58.8%. I gave them a future growth rate of 20%, which then gives them a DCF price per share $32.20. We have two sources of EPS growth rate for an average of 21.5. That goes into 72 3 times. That goes into 10 years 3 times. So then we could double our current EPS 3 times, which then gives us a future EPS of 4. We plug our 4 in over here. That gives us a fair value of $43 flat. Over here to the summary on Uber, we've got currently trading $51.58 per share. Fair market value based on all the calculators we just went over is $65.56. 30% margin of safety is $45.89. And analyst price target of $57.25. Now, with these numbers that we present here, obviously we are never going to be 100% correct, but our goal here is to be as close to correct as possible, which is why we take as many valuations as we can, combine them, average them together, and that is the way we do the analysis to figure out what is a potential fair market value on Uber. In case we are wrong, that is why we throw a 30% margin of safety on there. And that is our acceptable buy price, is if this company, if we like the fundamentals of the company, we like the story of the company, and it's trading within or below our 30% margin of safety based on the valuation and our fair market value that we get for the company, then this becomes our acceptable buy range on this particular company. Onto the stock chart for Uber. We've got 4 different trend lines drawn in here. They were in a pretty significant downtrend, but since then have broken out and are now making higher highs and higher lows. And after earnings, we can see we are also on the weekly chart. Last week, the week prior to earnings, company rallied into resistance ahead of earnings. And then after that, after earnings came out, popped through resistance and is now into new territory where between $48 and probably $61 per share. Based on technicals here, we could probably comfortably assume this might come up a little bit higher, maybe get to the middle of this channel and then probably pull back, retest resistance, which was now support, and then potentially find its way back up to $61 per share. Based on our price target of $65 per share and based on analyst price target per share, we're probably looking at about $61 per share for a fair market value on Uber right now. But what we can probably comfortably assume is that this thing will likely pull back. That is usually a very common thing to happen, is this will pull back to support. When it pulls back to support, that's pretty close to a buy range. It's a little higher than buy range, but if you believe in the company, you think this thing's going to see $61 per share, then just be patient, wait, see if this thing does pull back, and then maybe pick up a few shares and then ride it back up to $61 per share, which is where it is likely headed based on technical patterns here. But that is it for Uber. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.